Let's make sense of all the chaos that's happening in the world. Punita Kumar Sinha joins us for exactly that. Punita, hi, morning. Good to have you on the show. Punita, just
Morning.
so much happening around the world. And now, of course, with the recent geopolitical tensions which have escalated in the Middle East. And clearly, that impact is being felt with the cool off in the US bond yield as well. Would you say that the bond yield may have peaked out in the near term? And I ask purely because that's solely what's impacting equity markets across the globe.
Well, I think first of all, the inflation number that came out today was a bit disappointing in the US. So on the short end, I think rates are still high, whereas the long bond, although elevated, doesn't seem to be going up anymore because there's still some fears of a recession in the US. That there is a view that we are kind of in a recession. I don't see signs of it, but there is talk that actually the earnings season might be reflecting that the earnings will show some kind of an earnings recession. But I think the rising geopolitical tensions, that's a big concern that I think markets seem to be ignoring. The liquidity is still strong in the markets, but if you look at the rising tensions across the globe, I think I hope this war doesn't escalate. But at the moment, I think the markets need to be a little bit more mindful of the rising tensions and the risks to global growth and global trade with all of this kind of escalating tensions. And to top it all, there is a lot of political upheaval also that's going on in many countries, including the US. Elections are coming up. Somehow the markets seem to be pretty sanguine, but I think there should be some kind of reality check.
Same's the case with us, right, Punita? Because next month we're going to step into state elections as well. Do you think tactically one needs to be a little bit neutral, offload some positions, take the chips off the table, keep the powder dry? Because from now up until the general elections, I'm guessing the market will throw up a lot of opportunities and it will be a volatile ride.
Yeah, I don't think it's the India elections that's going to create the volatility. I think the volatility is going to come from across the world. US elections, as I said, heightened geopolitical tensions, uh, inflationary fears still across many markets. And then the China situation is still not stable. So while there is stimulus that the government is providing, I think the economy still needs a lot more support. And so all of that, I think, will create volatility going into the next few months. Now, India is in a sweet spot as compared to the rest of the world because of the growth that we have, and that growth and the demographic dividend, etc., is still very strong and is going to keep our economy relatively insulated and stable. And to a large extent, Indian small caps are demonstrating that decoupling. And but I think also the valuations in India are not cheap anymore because everybody is recognizing across the world that India is a sweet spot and a good place to be. And so everybody's investing, whether it's domestic investors, foreign investors, and that's raised the valuations of our markets. And so, if there's any risks that come from the global tensions and that the stocks and the companies that have had the big are the traded. So I think one has to be definitely careful on some of those kinds of names that include some of the small caps and be a bit more defensive heading into the year end.
Punita, hi, morning. What is the outlook then when it comes to the overall election impact? Because we've got the 5 state elections and then, of course, the big Lok Sabha election next year. And what would be your outlook in terms of how you see the markets really faring or in the run up and even during and post?
Well, I don't think anyone is really concerned about the general election because I think everybody knows and believes that Prime Minister Modi is going to, come back with a strong victory. On the state elections, I don't think there will be any significant surprises. So I don't think the markets need to be concerned about elections in India.
Enough, reiterating that point there on the elections. But give us a sense then, Punita, as to what the outlook is when it comes to the overall earnings season, given the fact that you're saying India, in comparison to the rest of the globe, could remain fairly insulated. Will that really play out in earnings as well going forward? Could there be any sectors that could be in an especially sweet spot?
Well, I think the earnings season should be decent because all the issues that what we're seeing in the rest of the world haven't really impacted Indian earnings. India is pretty much a domestically driven economy, and so all the domestic driven companies which are relying on government capex, infrastructure spend, domestic demand, all of that is still strong, and so those sectors and companies are going to see decent growth and hopefully some margin. If I look at what the analyst expectations are, there is expectation of margin increases. I think the sectors, as we've seen in the results of Infosys and TCS, those are the kinds of companies that will be most impacted by any global cues, which is why you've seen like a little bit of a downbeat guidance coming from the results that have been announced so far. Um, so I think the themes that have been playing out in India so far are likely to be the ones that are probably going to continue on the domestic side. And of course, one has to be very careful on the valuations and on the margin. I would think that would favor some of the larger cap names over some of the smaller cap names and some of the more defensive sectors that have been, relatively laggards compared to the really high-flying stocks, especially given the environment globally that we are. Of course, oil prices cooling off will continue to help India. India's own inflation, interest rate environment is fairly benign as well. So from an Indian perspective, I don't see significant concerns other than valuations.
Sure. Punita, just picking up on the point that you were making about IT, clearly the one commonality in all the IT numbers which have come out right now is that they don't have visibility on when things are going to get better. And, like you rightly said, thereby cutting the guidance as well, keeping all that's happening around the world also in mind. But is this the time to actually start nibbling into IT when news flow is at its worst?
Well, IT, the valuations are pretty decent. And I would call IT now a defensive sector because it's also a high dividend yield sector. So it's generating a lot of cash. I wouldn't call IT a high growth sector anymore, but one that is more defensive, stable, and a kind of a core place to be in. So I think as the risks towards the global situation increase due to geopolitical tensions, IT may be a decent place to be in because I think that they have inherently a lot of cash on their balance sheet. And so even if there is a little bit of a slowdown, they can weather that through.
Sure, and I guess that's exactly what we're seeing play out in the market as well. Good recovery in the IT names actually from where they started off in trade. But Punita, good to have you on the show as always. Thanks for taking the time out.